So we are sitting here with Lou Scatigna. Lou is a certified financial planner and president of AFM Investments for 36 years, you said, just this past
30
week, I
years
believe,
last
right?
week.
Awesome. Congratulations. That is a
Thank you.
huge milestone in the financial industry because when it comes to financial planning or the financial advisory realm, there's a lot of turnover. So a lot of people don't make it that far. Usually just a couple years to get washed out. So 36 years is absolutely incredible. Lou is also the host of the Financial Physician podcast, which you put out episodes quite frequently. You can find the podcast on Apple Podcasts, and I believe now you are the top podcast on, please state the
Podomatic is our hosting station. We're the number one financial podcast and have been for some time. We upload a 2-hour podcast on Sunday mornings, and we do right about a 1-hour podcast on Wednesdays.
Awesome. So Lou has made guest appearances on CNBC, MSNBC, and Fox Business, and has also authored the book, The Financial Physician, which I tried to find the e-version of it. I think you can only get the paperback version of it on Amazon, but I'll go ahead and purchase that afterwards because I'm looking forward to reading that.
You can get it free of charge on my website, thefinancialphysician.com. You could download the PDF. It's available for free.
Oh, there you go. I didn't look in the right spot, and I appreciate that. So we'll put that in the description of the link for the video so you guys can also go check that out as well. Now, we have a few topics that I wanted to cover today, and I'm really looking forward to picking your brain on some of these. The first thing, something that's more recent and something that is in your expertise, is Medicare. The Biden administration has come out and has touted their new policy that they've been able to push forward with the new Medicare drug price negotiations. I just want to get your thoughts on where you see Medicare going, especially with that Part D. And do you see any long-term impact for people that are on Medicare when it comes to their drugs?
Yeah, keep in mind, this is not actually Medicare. When they say Part D, you get Part D from private insurers. So this is not really a government plan. It's a separate plan. You pay premiums, or if you're part of a Medicare Advantage plan, which again is a private plan that takes over for Medicare. This is really a private thing. Will it save money for people? Maybe it's going to save a little bit, but what is the tangential effect whenever government gets involved in any industry? It's never good because industry is in it for profit. So they'll zig and zag. They won't produce certain drugs. They won't make certain drugs available. Or what they'll simply do is they'll raise your premium to compensate for the lower drug prices. So at the end of the day, we all pay for it.
I want to read the Tax Foundation, which is a site that I regularly use. I think they have a lot of great blog posts about this kind of stuff. It said the European Union have discouraged drug R&D and slowed patient access to new drugs because of their drug price caps. For example, patients in the United States have access to 93% of new cancer treatments that have been approved since 2012, while patients in other countries have lower access. In Germany, only 71%, the UK, 69%, France, 64%, and Canada, 59%. The CBO actually estimates pharmaceutical revenue drops of about $237 billion by 2031. And other estimates are much larger at $450 billion from 2026 to 2032. Now, 2026, if I'm correct, this is the first year this really goes into effect. And they don't start releasing, well, they just released the name of the drugs, but they don't actually release the new price negotiations till just prior to the election in 2024. Yeah, what a coincidence there. Do you see definitely a lower access to drugs? And do you think that, how do you think that these private companies offering Part D drug plans will react to this as well?
Uh, I don't really think it's going to terribly affect access because the price reductions are not huge. If you ever saw the price of average drugs that you get at a pharmacy, it's outrageous what they charge for drugs. So even if there's a 10 or 15 or 20% price reduction, and I'm not expert, I don't know how much the cuts are going to be. I'm not aware of that, but it's not going to be enough where it's going to really hurt these pharmaceutical companies. They use that as a negotiating tool. They say, well, if you cut our prices, we're not going to be able to develop anything. And I believe that's a little bit disingenuous. They'll still produce drugs and they'll still make a lot of money. They may just make a little less money. And ultimately, we all pay for it some way or the other.
Okay.
But
So
generally, if government gets involved and starts mandating private businesses to charge anything or reduce their prices or do price fixing, we'll talk later maybe about inflation that's coming. But governments like to have price controls that causes more inflation down the line. Or you have wage controls. It doesn't work. Whenever a government gets involved with business, it crosses over into the socialism realm and sometimes the fascism realm if we get deeper into it.
what is
But
fascism? It is
anytime
fascism.
is when businesses get involved with government or government gets involved with businesses, the average people get hurt. And I think we're
Absolutely.
heading down that path right now.
Yeah, I 100% agree. I guess you're a little more optimistic than I was, but you know more about this than I am. You have a lot more experience. So when I'm reading about potential loss in revenues from drug companies, they're obviously going to promote more of an extreme outcome because they're the company themselves, and the government's going to be on the other extreme. So again, we'll see what happens there. I'm of the belief, let the free market do what the free market does and let it take care of itself without the intervention. Because like you said, when the government gets involved, now you're going down the road of fascism. And that's a lot of people don't understand is the true definition of fascism. I'm actually glad that I heard that on your show because we're in agreement, and that is private enterprise, but controlled fully by the government. So it's just a
Yeah,
facade.
they're,
It's,
they're in bed together. They're in bed
exactly.
together. Corporations and international corporations and government in bed together. They control everything, whether it's big pharma, whether it's the military industrial complex. You can go to any industry when government gets involved in it. It kind of corrupts it.
Next thing I want to move on to, though, since we're talking about the Medicare, something that's related to Social Security. Now, you often hear the left accusing the right of trying to eliminate Social Security. I'm of the opinion that Social Security is the largest scam to ever happen in the United States history. That's just my opinion. I think they should phase it out so the people who have paid into it for a while, who are maybe in their 50s, late 40s, and then obviously in their 60s, can still receive benefits they paid in. But someone like myself, who's only 31 years old, phase it out, make it to where I don't have to pay, but also where I don't get any benefit. And I've seen what they actually have implemented here in Australia. And while it's not perfect, it is far better than the Social Security system because it's more privatized. What are your thoughts on Social Security? And do you think that there's any validity to it running out? I think 2030 is the estimate.
Social Security, I have a more optimistic view on it than you do. It's certainly necessary, and I see many people in my practice that Social Security is a big part of their income, and it's not a government entitlement. It's something that we fund ourselves. I did a calculation on Sunday's podcast about just my own calculation. I went out to ssa.gov, which you all should do. You can get your own account, shows what your benefits will be each year that you choose to retire, at what age, but it also shows your earning history. And it also shows all the money that you paid into Social Security and Medicare and how much your employer matched. So for me, it was something like $650,000 went into Social Security out of my paycheck. And since I'm the employer too, and I had to match it, that's my business. So I put in over 600,000 into Social Security. I'll have to live 40 years once I start getting benefits to get my money back. And I also did a calculation. If they took that money and invested and got a 5% rate of return, I'd have $1,200,000 in an account for myself. If they got 7%, it'd be over 2 million. So Social Security is a Ponzi scheme. It's just what it is. It's your money doesn't go into an account for you. It goes to the government who hands it out to people who are retired. And the problem with all Ponzi schemes, sooner or later they end. And with Social Security, when it was established in 1935, people died at 66, 67, and you started at, in your mid 60s. So they only paid out for a few years and then you died. Also, you had 13 and a half workers for everybody that was retired. One person that was retired. Now we have two and a half. People are living out to 90, 95. So the system was not ever engineered to handle this. On top of that, you have 10, 11,000 people a day turning 65 and going into the system, whether it's Medicare or Social Security. Now, do I think it's ever going to go bust? No. Politically, they cannot allow that to happen. So what will they do? There's three options that they have. Number one, cut benefits. They're not going to do it. By law, once the trust fund goes negative, they have to cut them down to 79%. Could you imagine a retired elderly person getting a 21% pay cut on their Social Security, especially in the inflationary times that we live in now? It just politically, it's unpalatable. So what they're going to do is either increase the wage base. Right now, the first in 2024, the first 168,000 that you earn is subject to 6.2% withholding and matching from your employer. After that, it stops. And there's a lot of talk about starting it again at 400,000. So people who make a lot of money will pay more into the system. Some are saying that there should be no cap on it, that every dollar you earn should be taxed for Social Security. The second thing that they can do is raise the retirement age. And I think they should. Now, I'm already in the system. I'm not collecting yet, but I'm 63. Nothing they do is going to affect my benefits. They're not going to affect somebody who's in their 60s or even late 50s, because it just, again, politically, it doesn't work. People have a plan for their retirement based on certain numbers and stuff. You can't do that. But you can take that away from people in their 40s and 30s and younger and say, well, now the earliest you could take Social Security is not 62, it's 68. And full retirement age will be 75, 76, because people are living longer. And I don't see why I need to get Social Security at 65. I mean, people are still young, Nick. I could still work. Most people could still work at 65. I remember my grandfather was 65. He was an old man. I mean, like what would be an 80-year-old man now. When my father was 65, he looked like a man that was in his mid to late 70s. I'm almost 65, and I don't think I look like an old man, and I don't feel like an old man. And that's because of longevity, and we live longer. So I have no problem with them raising the age. I have no problem with them raising the wage base. I do have a problem with them raising the rate. All right. People see how much comes out of their paychecks from taxes, federal, state, unemployment insurance, FICA. We're getting squeezed all the time. I don't want taxes. But if you have to raise the age, okay, do it for younger people, but don't do it for me.
No, I do agree. And that's something that, regardless of my opinion, it would be so unfair if they made any changes that would impact someone who's paid into it their entire life. There is somewhat of an entitlement at that point. And it's not necessarily a government entitlement, but it's an entitlement to receive a benefit because they've been robbed of a substantial, 6% of their own side of the income, plus 6% that maybe even the business could have paid them instead of paying into Social Security throughout their entire life. Like you said, yours was, I think, what, $600,000 total?
Over.
Think about,
More than
yeah.
that.
And think about someone who may have earned right at that income limitation throughout their whole career, or a lot of it, right? So it's a very regressive tax where I think what's the new income max? I know it was 140 some thousand. It's probably a lot higher than that
It's up to
now.
168 and change.
So
Starting
168,000 some change.
Yeah.
Yeah. And if you make
Yeah.
over that, you don't pay in anymore. So someone making $1 million, you're talking about 16% of their income is being taxed, where someone making 168,000, 100% of that income is being taxed towards Social Security.
But there's another way you could look at it too, is that if somebody who makes $50,000 a year is contributing less to the system than somebody who's making 160,000 a year. So I've contributed the max almost my entire working life, and I don't begrudge anybody who didn't. But I'm saying is, you mentioned before the show when we had our pre-interview that you think it's kind of regressive in that it benefits the rich. Well, that's because the people who make most money put more into the system over their lifetime, and so did their employer. So they do get more out of it. That's right. If you put more into, the amount of your benefits are based on how long you worked, your work history, and how much you earned and put into the system over that time. And maybe I'm biased because I maxed it out every year for my working life. But I don't feel bad that I get the highest benefit given the contributions that I've made over my lifetime to the system. And I'm willing to pay over the 168. I have no problem with them raising the wage cap. I really don't. I think it's unfair that people who make $1 million a year stop paying into it at 168,000. And it would cost me money. But I think it's the right thing to do. The Social Security now, and I'll tell you as a planner who's been around the block 40 years, until about 15 years ago, when people retired, they had a pension. They worked for a company their whole life or a union. They had a pension that went away. They had their house paid off when they retired, and they had very little in debt. Now I'm seeing people that are coming to me 55, 60 years old that have a mortgage on their house, have two car payments, have just a small 401k, do not have a pension, and Social Security is going to be their main income source. All right, so it can't go away. Or you think there's a lot of poverty in the country now? You haven't seen anything yet. You're going to see elderly poverty in America, even if Social Security stays, because Americans are still in debt, going into retirement with little in the way of savings, no pension available, and Social Security is it. I do not know how the vast majority of seniors in this country are going to stay solvent in the years to come.
There is this, I think, misconception with a lot of young people now, especially on the left, where Social Security is this end all be all. And it's not, because you need something on top of that. It helps. It supplements income. It's not just a sole source of income that is saving people from poverty when they retire. When I talked about it benefiting the rich, I am 100% in agreement with you. If you pay in more, you should receive more. What I was getting at is someone who's wealthier tends to have an average lifespan about 9 to 15 years longer than someone who's low income. You also have the fact that the way Social Security works is the longer you wait to receive benefits, especially after that 100% Social Security age, which I believe is 66 or 67, you get an 8% increase in your benefit. So someone who is wealthier and has another form of income can hold off taking Social Security at least until the 100% age, or up until the max, which is age 70. So they would
70.
receive up to 132% more in a monthly benefit than someone who takes it at age 62, who only gets what I think it's a 30% reduction in monthly lifetime income.
Yeah, if you take it at 62, you lose 70% from full retirement age for people who were born 1960 and later, which is the year I was born. The full retirement age is 67. If you're older than 63, then it's 66 and 10 months and so forth. But for most people listening to us, it's going to be 67 unless they raise it, which I think they will as
Yeah.
part of Social Security reform. But you're right. Richer people can afford to wait longer. Poorer people tend to take it at 62, 63, 64. So they take a diminished amount of a diminished amount. Okay, so I'm a top earner, right? So I'm going to get the maximum amount. And I went on SSA.gov yesterday morning to prepare for the podcast, and I ran the chart on myself. At full retirement age of 67, I get $3,550, something like that. I mean, that's quite a bit of money. The average Social Security check in America is $1,700. So I can afford to wait to full retirement age. I'm still working, and I'm going to work probably through my full retirement age. But the bottom line, you're absolutely right. People who are lower income tend to take it earlier, tend to take 70% less than a diminished amount that somebody who's a higher earner makes. Absolutely right.
Yeah. And live shorter on average.
And like you said, live short on
Yeah,
average too.
yeah.
I didn't know it was that many years.
Yeah.
You taught me something.
I looked up a couple different studies. I want to make sure, but it was between 9 and 15 years on average between a high. Now the class, I'd have to go back and look up what the class difference is. If it's like someone in the bottom 50% as opposed to someone in the top 20. I can't remember what
I
that
guess that
was.
means
So
because you could afford better health care and everything else, and maybe you don't work with your body your whole life like a carpenter does and so forth. So you have a little more healthiness. To
it
use
was a
a word
significant amount. It was a significant difference, though, in received benefits from Social Security. And so when you actually look at it, the people that are advocating for Social Security are also the same people that are advocating for helping the poor and putting a system in place like welfare systems that benefit lower income. And Social Security, when you actually go and do the numbers, it's very, very in favor of high income people. A lot of those are the politicians on the left who are very wealthy and advocating for more Social Security, right? Just coincidentally. But
Mm.
that was something I found interesting. Social Security is actually something that inspired me to do the podcast while I was working in the securities industry because of like what you said. If I took that money, I was able to invest it, especially at a young age, just in the S&P. This significant difference I would have in money and wealth when I retired, and the fact that my problem with Social Security is when you die, If you're married, you can have spousal benefits, that's fine. But let's say you weren't married or your spouse dies as well, no one receives that money in your family. It's not your money.
Nope.
There's no wealth to be transferred down. So
Absolutely not. That's one of the big issues with Social Security that I have. I said before, if it was invested, there'd be a big pool of money. I could take just the income it earns, and then I could, bequeath it to my children. You can't do that. So Social Security is a combination between insurance, savings, and welfare. I mean, it's a combination of those things because you could work your whole life. You're a single person. You could work your whole life. You could put hundreds of thousands of dollars into Social Security and get two payments and die and it's over, or die before you get Social Security. And if you're not married, there's no marital spousal benefits. That money was money that went right into the system to pay other people's retirement benefits, and you wind up and your family winds up with nothing.
absolutely. Now, let's move on. Let's get off of the depressing topics of Medicare and Social
Yeah.
Security. Let's go into recession. Now, in 2022, the United States experienced negative consecutive quarterly GDP growth in Q1 and Q2, which by any means, any test I've ever taken, any class I've ever had on economics in college, I know on every one of my securities licenses tests, the definition of a recession was 2 consecutive negative quarters of GDP growth. Yet the White House, when you go on their website, has completely redefined the term. And they use certain professionals that have gone along with their new definition of what a recession is. And since unemployment was at all-time lows or whatever their reasoning was, we have never really declared an official recession during that time period. Why do you think this is? Why do you think that all of a sudden things just change? Is it to cover their own ass? Have we been looking at what a recession is the wrong way?
Hasn't the definition of everything been changed over the last few years, including gender and everything else? I mean, we're living in an Orwellian society where the truth is never told anymore. First off, I don't believe any government economic statistic that comes out. They're all fudged, from the CPI to the employment numbers to the GDP. They're all massaged, and now more than ever. Now, this happened in many administrations. It's not just this one, but now we're to the point of where it's fantasy. They will not in the next year report a negative GDP, no matter how bad the economy is. That's my opinion. I think the employment numbers are so skewed and so fudged, and they're always revised down months later to make them look better than they are. There's an economist that I follow. His name's John Williams. He has a website called shadowstats.com. And what he does is he calculates government numbers the way they used to calculate them in the 80s before they started screwing around with these things. He says right now, unemployment is really at least 20%. He says inflation is at least double what they're reporting now, and double digits. He challenges the GDP numbers all the time. We are in recession. This economy is contracting. You've had, what was it, 16 consecutive months where the leading economic indicators are negative? I mean, the last time we saw that was 2007, 2008. And you know what happened then. So it'll be obvious to the average American, if it's not now, that we are in a recession within a few months. But I don't trust the government to report those numbers accurately. And if they do come in negative, like you said before, they'll change the definition of what recession is, and they'll point to some arcane economist who agrees with them.
So you brought this up. I don't know if it was your show yesterday or if it was one you did in the last couple of weeks. I listened to several of them, but you're saying that the initial reports come out and then they'll go back and actually revise these reports later on.
Yeah, after the headline, the headline will come out. The economy created 225,000 jobs last month, right? And then come January, they'll revise October number down by 100,000, maybe more sometimes. I've seen them year over year revise them down 1 million. So you can't trust these numbers. Let's face it. If you're the party in power, do you want to be the one that's reporting negative GDP, that you're in a recession? Are you want the guy who wants to report that unemployment is rising dramatically and we're not creating jobs? Of course not. It's not good politically. But it's going to be bad next year. The economy is heading into the abyss. It started already. It is going to be evident to everybody in the next few months. I don't know what will trigger the stock market crash, a banking crisis. Who knows what it'll be? But American in 2024 are going to know that we are in dire economic times, and the government's going to do everything they can to massage these numbers to make you believe it's not true. But Americans who go to the grocery store know it's true when you're talking about inflation. People who lose their jobs in the middle of this are going to know that we're in a recession. So it's hard to massage numbers. It's hard to lie to the American people when Corinne Jean-Pierre comes out and says we've created 11 million jobs, when a good portion of that were people just coming back to work after COVID lockdowns. Everything is a lie. Everything is an untruth. Everything is propaganda. And that's the society we live in now. And that's the government that you're dealing with now. And it's getting worse by the day. And if you would believe the Soviet Union when they came out with news, then listen to Pravda. Well, we have our own Pravda now, and that's the mainstream media.
It's funny to me because when it comes to unemployment, the way I look at it, and a lot of people don't know this, the Soviet Union had 100% employment. They had 0%
Yeah,
unemployment.
right.
And the way they measure unemployment, there's so many ways you can interpret it. The other thing, just some stats here when it comes to Bidenomics is, 3.7% year over year inflation as of September. But what people don't consider is that's 3.7% between September and last September, or September and last October, year over year. And then it compounds as well. So to say that it's 3%, well, inflation was growing at that point in time. So it's 3.7% higher than it was last October. And in 2022, we were experiencing the highest inflation rates we've seen since the 70s and 80s. So how much higher is it actually? And then how they measure inflation, like you said, they don't include gas prices and food into that CPI measure now. So I believe they did so back in the late 70s and 80s. That's why you see it as 15% inflation. Now it's lower, but in reality, inflation is much higher than it was back then.
Yeah, and the thing too is that they like to use things. Americans are dumb for the most part. They are. They listen to what the media tells them, and if the media comes out and tells you inflation is going down, does that mean prices are going down? No, it just means the rate of inflation is going down. Prices are still going up. So even if it's true at 3.7%, which it's not, prices are still going up. Maybe not as much as they were when they were going up 9.7% last July or July 2022, but they're still going up. And another thing about the inflation calculations, there's something called hedonics. You ever hear that term before? Hedonics?
No,
Well,
I
most
haven't.
people haven't. Okay, well, hedonics is they figure that I want to keep it simple. It's not exactly this way. But what if beef prices are going up and they're going up a lot? They take beef out of the equation of inflation and replace it with chicken, saying because if beef is going up, people won't buy beef, they'll buy chicken. So inflation really isn't going up. They replace it. Also, another way they do hedonics is say you go buy a piece of technology, whatever it is, a computer or something like that, and it went up 15% year over year. It didn't really go up as far as the government's concerned because the computer can do more. It has more memory, it's faster. So you're really not paying more for the same technology. So you see how you could massage these things to make them look anything they want. Now, in the employment numbers, here's the real fudge factor: the birth death model. The birth death model is a number that they just make up. And what it means, birth means the creation of new small businesses. Death means the closure of small businesses. So they look at the birth death model and they estimate, they have no figures. They just estimate and they pull it out of thin air how many businesses were created, how many businesses closed, and how many people they hired. And they add 100 or 200,000 to the number of employed people. It's all fudged. They can make the employment number anything they want it to be. And then, like I said, then they coyly, when no one's looking months later, revise it down.
That's
So same thing that comes out of the government when they tell me anything about the economy. Use your own anecdotal, your experiential, the way life is for you and your family, and you know what's going on. And like they say, Americans vote with their pocketbook, and I think it's going to be a big factor in the election next year.
I agree. I agree. So on the topic of inflation, you think that we could be experiencing hyperinflation, which is something people use that term loosely. Hyperinflation is 50% or more in price increases per month. We haven't experienced that in the US, some examples of where they have experienced it: Russia following the Soviet Union, Germany after World War One, Venezuela currently, I believe Argentina is another one. Do you think we're going down that route?
I'm certain of it. It's just a matter of when. Okay. I did on my podcast, and I also videotaped the podcast at the beginning, the financial stuff we talk about, and I have a Rumble channel for the show. And I did earlier this year the five historic inflations, and I explained how they came about, starting with Rome. They started diluting the silver in their currency at the end of their empire. Then we had the Weimar Republic in Germany after World War One. That hyperinflation was incredible. I mean, and if you look at it as it took something like 187 Reichmarks to buy an ounce of gold in 1919. It took 87 trillion to buy an ounce of gold just 4 years later. Gold didn't go up. The Reichmark disappeared because they just printed it into oblivion. Then we did Yugoslavia was the worst inflation in history in the 1940s. That one was unbelievable. I mean, at the end, everybody's broke anyway. It doesn't really matter. Then you had Zimbabwe and you have Argentina. It's the same recipe every time. And anybody who thinks that it's going to be different this time for the United States, it's not. And this is the process. A country becomes prosperous. They become good manufacturing, good traders. They have a lot of money coming in. They have a surplus. They're able to build infrastructure. They're able to invest in their military. They're able to project power around the world and become an empire. Then suddenly, the people in the country realize that they can start getting benefits from the government through their representatives. And then things like Social Security come about and welfare and all that kind of stuff. And then all of a sudden, the country starts going into deficit spending, whether it's the Rome in their expansion of their empire that they couldn't afford anymore, or the United States between our military projection. And you know how many bases we have around the world? It's incredible. We have almost $1 trillion defense budget. But sooner or later, it's the entitlements that a country starts giving their people to keep them happy that causes the deficits. Now, when you have deficits, how do you fund them? You issue bonds or you borrow, right? And as you borrow and become more in debt, all of a sudden your currency becomes less viable. And if it wasn't for the world reserve status of the US dollar and the petrodollar status, where everybody's trading commodities and everything else around the world in dollars, the US dollar would have collapsed already, $33 trillion in debt. And now we have de-dollarization going on where the BRICS countries now are coming together, and it won't be long before they have their own commodities-based currency. And we're going to see now, and this is a very pivotal point in the petrodollar, because now with the war in the Middle East, we're going to see countries get together and abandon the US dollar, especially if we go in and we're actively involved in this military issue. You're going to see, you're probably not old enough to remember the oil embargo in 1974, but I do. I was 14 at the time, and we were embargoed. Oil prices went to the moon if you can get it. There was rationing. There was alternate days to get gasoline for your car. But look at it this way. That's the weapon that the Arabs have against the West is oil. And they're going to stop trading in U.S. dollars, number one. But then they can start embargoing the West. And good thing we have a strategic petroleum reserve left, which we don't. Thank you, Joe Biden. I mean, he's done everything to destroy our ability to withstand an embargo, destroyed our ability to produce. Our pipeline situation has been shut down. And now, if they embargo us, what do? We got 14 days worth of oil left, and the inability to ramp up production here in this country. It's a disaster. Everything the Biden administration has done has been to the detriment of the country. And we have to be very, very careful there. But when they start jumping bonds, and look, Russia's sold all their bonds, China's not buying our bonds anymore. It comes down to monetization. And this is where hyperinflation comes in, where now the only buyer, the buyer of last resort, is the Federal Reserve, the central bank. And how do they buy it? They electronically create money out of thin air, buy the bonds. That's called monetization, which makes the dollar worth less and less and less, which makes inflation go up and up and up. And then when people start feeling that, look, inflation is going to get really bad, their expectations rise. They start trying to get out of paper and they try to buy things, whether it's real estate, gold, silver, food, oil, because they know that their paper money is losing value. Hyperinflation comes when that confidence is totally lost. Now, I know it's coming. I hope it doesn't come soon. It could happen in 3 months. It could happen in 10 years. But it's a fact because you can't look. We're going to have deficits in this country. Right now, it's about 1.5 billion. It's going to be 2 billion a year. And keep in mind, with rising interest rates, the interest on our debt is going up because we
Trillion,
have a
right?
lot of debt out there.
You mean trillion, right? The deficit. One
Sorry,
and
what did I
one.
say?
Yeah,
Billion?
yeah, yeah. I just wanted
What's
to
it's only
yeah.
a thousand. It's only 1,000 times different. But yes, we have $33.5 trillion in debt. It's bad anyway. But when your average interest on it is 2%, that's one thing. When your average interest on it goes up to 6%, that's a problem because every 1% in interest is $330 billion in additional interest cost. And where's interest rates now? They're up tremendously over the last couple of years, and they may have to go up higher, especially if there's no market for our bonds. And to fetch money and investors, interest rate on bonds may have to go much higher. I've heard some people, Rick Santilli on CNBC a couple of weeks ago started a stir saying that 10-year Treasury yield may go up to 13%. If that happens, you forget the word recession. We're talking 1930s style depression. And that can't happen. And the Fed will print money, they'll inflate it away. And that's how you look at, if not severe recession, I mean, if not hyperinflation, severe inflation that the average family just cannot withstand.
Well, you bring up a good point because look at the bank failures we experienced earlier this year and the end of last year. That was the result of them holding a significant amount of treasuries on the balance sheet. And that jump in the interest rate, it was unaffordable. They had lost a significant amount of money. These are supposed to be the risk-free investments. When we think of risk-free, the risk-free rate, that comes from treasuries. And as they bid up these interest rates, because investors are requiring a higher return, which they will, especially if the treasuries are becoming more and more risky, then it becomes more expensive to service that debt, which by the Constitution, the United States doesn't necessarily have to pay off its debt, but it does have to make payments on the interest. And like you said, as those interest rates rise, that interest become more and more expensive. I think I saw something, a significant amount of the government spending in a few years could be going towards servicing just the debt.
Well, it already is. I mean, a couple of years ago, the interest on our debt was a little over $400 billion. This year, it's going to be close to $1 trillion. All right. If interest rates stay high and bonds continue to mature, because most of our debt is short term, it's not long term. Uh, the Fed and the Treasury decided to let's take advantage of zero interest rates and issue 1, 2, 3, and 5 year debt. That debt's maturing now and it never gets paid off. Right? They just issue new debt to replace that debt and pay it off. So now bonds that were yielding 1%, 1.5% or less, now as they mature are being replaced with 4, 5, 6% debt. So 1 trillion in interest in a year may be 1.5 to 2 trillion in interest, and then maybe 3 trillion in interest. Now, where do we get the money to pay the debt? We don't have it. We have a deficit right now of 1.5 trillion. We borrow it. So now you see how this snowballs and how it goes exponential? That's what causes the hyperinflation that's coming. And like I said, if I had a bet, I would think it's going to happen in the next 3 to 5 years. I hope I'm wrong. I really am. I really do hope I'm wrong. But at the pace that we're going right now, it's unsustainable. Something's going to break in the system. And, if we have, the Middle East blows up and we have oil issues and stuff like that, and gasoline goes to $10 a gallon or higher, I mean, what's that going to do to the economy? We have a major problem ahead of us, and it's ugly. There's things you could do to protect yourself, and we could talk about that later on. But as a financial advisor, 40-year financial advisor, I've never been more concerned about markets, about the economy, about the well-being of the middle class in this country, and it's very hard to be an advisor when you have such volatility, markets, even the bond market, like you said, last year, you couldn't hide anywhere. Stocks and bonds both got killed. And you made a good point before about the banks. You said that a lot of banks have bonds that went down. Yeah, they're risk free. If you hold them to maturity, you'll get the full amount you invested in them. But if you have a 20-year bond that's yielding 2%, and now bonds are yielding 6%, nobody's going to pay you full value for a bond yielding 2 when they could buy one getting 6. So maybe your bond has to drop 30% for you to sell it. Well, that's what's happened to the bank portfolios. Now, that's fine if you don't have to liquidate them. But what we're seeing is a lot of money fleeing banks. So now banks, to pay back depositors, were forced to liquidate these bonds at a loss, burning their capital and making them insolvent. And that's what happened to Signature Bank, and that's what happened to Silicon Valley Bank. And that's what's going to happen to the big banks too, because they have enough money right now where they don't have to sell those bonds. They don't have to realize those losses. They don't even have to adjust their balance sheet to market the real value of those bonds. Uh, so the accounting's fudged too. But sooner or later, as more money exits the banking system, as fear starts to come in, and we've seen deposits flee the banking system and go to better places like U.S. Treasury money market funds. No risk, no worry about FDIC, no worry about any limits. Treasury bills, I mean, they're not going to default. They may be inflated away, but they pay more. Go to a bank and try to get 5% on a savings account. You can't, right? So why would I keep my money in a bank that could close the doors on me, could fail on me, that I need FDIC insurance for only 250,000 of my money, when I could go put it in a risk-free U.S. Treasury money market, not worry about banks failing, not worried about anybody failing. The U.S. government's not going to fail. I mean, not per se. They'll just print money and inflate it away like every other empire has done at the end.
That's a great point. And the other variable there, when we were talking about the banks, is the cost of bailing the banks out, because that's obviously the solution that they're going to take. They have taken in the last several years when it came to the two big bank failures earlier. I think it was this year or late last year, and then going back to 2008, 2007. And so you have two sides of that. You're actually exponentially growing the debt, not just by the money the banks are losing, but also with the money that it takes to bail them out.
You got to understand the basic equation here, too. FDIC has $125 billion in their reserve fund. Bank of America has 1.4 trillion in deposits. So if a Bank of America failed, like 3% of depositors would be made whole and FDIC would be done. They'd be bankrupt. So now what happens? Now what happens is the U.S. Treasury refunds the FDIC the money they need to pay off the depositors with printed money. And yeah, you'll get your money back, but what's it going to be worth? You're going to be getting your money back in a hyperinflationary environment. So, FDIC to me is a joke. It always has been a joke. And I've told people on the radio, and it's caused me problems with the government, I'll tell you, do not have your life savings in any big bank. And now, after what we've seen in the last 12 months or so with the smaller banks, don't have your life savings in any bank. Keep your money in U.S. Treasury money markets or gold and silver or real estate, because that money in that bank, either you're not going to get it back. There's a report that came out in 2012. I have it. And it was written by the FDIC and the Bank of England. And it was how to unwind systemically too big to fail banks, international banks. And if you read it, they talk about unsecured creditors. They never use the word depositors. But when you deposit your money in a bank account, you are lending the bank your money, right? They're the debtor, you're the creditor. Just like when you borrow money from a bank to buy a car or a house, right? You're lending the money to the bank. It's not yours. It's not in a separate account anywhere. Yeah, there's numbers on a piece of paper, but it's already been lent out. It's gone. All right. So you're lending the bank. So you're an unsecured creditor. If you have a mortgage with a bank, at least they have your house. They're secured. You're not secured. And you're the last one to get paid. Other banks with derivative positions with that bank get paid first, which would wipe out their capital. What you would get is stock in the bankrupt bank as opposed to getting your money back. Or, like I said, the Fed will print $5 trillion, give it to the FDIC, bail everybody out, and then you'll get your money, but won't be able to afford anything with it. And I think that's what's coming. So, I've protected myself. It's not going to destroy me. It's not going to destroy my clients. All right. But you have to make sure you understand the dynamics of how this ends. And it ends very, very badly.
This is a great conversation. I'm glad I can have someone on here that can relay this information in a lot more elaborate fashion than I can. And when we talk about Bidenomics, we talk about, I think the 30-year fixed mortgage rate is around 8.69% now.
Seven,
We have,
seven,
is it?
7.6. Yeah.
I looked it up.
Hasn't gone over 8 yet. It hasn't gone over 8 yet, but it's on its way.
Well, I Googled it. Google's not always right. But I think you're right, because I do remember reading that report. Negative real wage growth. This is the important one. While nominal wages have risen, Biden, throughout his entire presidency, has actually experienced almost the entire time negative real wage growth. So that's adjusted for inflation. It was negative 3.5% in 2022. And then September year over year was negative 0.01%. He had gone positive there for a few months and now he's back to being negative. So even though people's wages are rising, they're not rising. And that's also with a decrease in the strategic oil reserves, accompanied with increasing gas prices, which some people don't know. In the Inflation Reduction Act, I call it the Investment Reduction Act, but the to pay for a lot of that was selling out of these strategic oil reserves and trying to make revenue to help fund a lot of the projects in it. So if you look at a graph, you can actually see a huge drop off starting in 2022, just prior to the passing of that bill. And really, when they were trying to pass it the first time, which is the end of 2021, you can see that dump off in the strategic oil reserve, and it has continued to decline. You also have an increase in things like the use of ESG scores, and then a significant expansion of the money supply via his infrastructure spending, Inflation Reduction Act, and his COVID stimulus package, which did not need to be passed. And what people don't realize is while under Trump we had two COVID stimulus packages, Biden actually passed one later on that was larger than both of those two put together. And you're talking about a significant amount of money that has been pushed into circulation. And it's just common sense why we're experiencing inflation like we are. Do you see anything good with the Biden administration's policies?
None, nothing, zero. There's not one policy of this administration that I agree with. Everything that they've done is to harm America and Americans. It does not. If you wanted to harm our economy, you wanted to harm the middle class, harm our national security. Everything that this administration does, let's put it this way, they wouldn't do anything different. All right, from destroying our energy independence to opening up the border to God knows who's coming through now, to Afghanistan, our foreign policy. Everything that this administration does is not what somebody who loves their country would do. And we could spend hours talking about that. But no, I don't believe. And Bidenomics, that whole term is a joke. And you know what? By the time the election comes next year, that's going to be a curse word.
Well, now,
Bidenomics.
now you hear him going with the term Trumponomics. You always hear about trickle down economics, which to me is the biggest joke because it's such a fallacy and a made up term that was used by the left to push down Republican economics. But really, what they're referring to is the Laffer curve, which is only a relationship between tax rates and tax revenues. The Bidenomics thing is, like you said, I agree. They won't use that anymore. It'll be so unfavorable for them politically that
I think it's unfavorable now. I think people when they hear Bidenomics, they're like, "Give me a break." If this
yeah,
is Bidenomics, I don't want any of it.
I agree. And if it wasn't for COVID, and really even when you go back to COVID and you look at Trump's policies, inflation averaged less than what the long-term inflation average. It was around 2.5 to 3% normally is what inflation is. Trump was below that every year, even with extremely
Officially,
low interest
officially.
rates. Yeah,
It
even
was
with it.
higher than that because the official number is wrong, but it was absolutely at the lowest we've seen
Yeah,
in
as
many
far as the
decades.
same measures as today, though, as far as the same measures
Yes,
as today,
absolutely,
y-
absolutely.
what people also don't realize is they look at how the debt increased under Trump and it did during COVID. But if you look at before that, Trump was on his way to running a surplus in the deficit until COVID hit. Every year, when you go and look at it, that deficit was becoming smaller and smaller. So he was actually doing a lot of good. He was increasing tax revenues, even though he cut tax rates. He had more people filing tax returns, and the rich actually paid far more in his tax plan than anyone. So when they said that the rich got the huge tax break is funny to me because they didn't. I think there's a reason why Democrats don't like his tax policy, and that's because these states like California with the high state taxes, Trump limited how much you could deduct in your state and local taxes. And when he
Oh yeah,
did
it cost me
that,
a lot of money. Cost me a
yeah.
lot of money
Well,
here in
yeah,
New Jersey.
see, I was in
Yeah.
Tennessee and then in Florida, so I was lucky enough to not have to worry about it anyway. But people don't look at the details of that and how it actually costs the wealthy more money, especially in these high tax states.
It cost me about I figure about 7,000 a year more in taxes when they had that salt issue when they lowered it to 10,000 as a maximum deduction. And when they did that, very few people itemize now. I'm also a tax accountant for 35 years, so I do 350 taxes a year. And most of my clients are wealthy or well off, and almost all of them were hurt by it.
Well, the itemizing thing was a big transition, right? Less people itemizing. and just use the standard deduction. So you had less people deducting money off their income and people paying more in taxes. And the bottom half really benefited from it. I know I did.
Well, they doubled the standard deduction, and that kicked a lot of people out of the itemizing, the need to itemize because they didn't have enough deductions, especially with the salt cap. So everybody now is just taking a standard deduction. I think I probably have 10% of my clients will do a Schedule A, and that's usually because of significant medical expenses or significant charitable contributions that exceed the standard deduction.
But it was a big transition from, I bet you, but prior to that, there was a lot more taking it, doing the itemizing.
Absolutely, and uh, for, it hurt the wealthy more than anybody, and especially the wealthy that live in high tax states like New Jersey, New York, California,
Yeah.
and
Now,
that's where the wealthy tend to live.
yeah, well, did tend to live. They're moving out of that now.
Yeah.
So let's go into two different things here. The one is the gold, as we're talking about inflation, things like that. And then I don't know if you're how well versed you are in modern monetary theory, because that's seems to be where I think we're going. But why gold? Why? This is one thing I am having trouble, I guess, get behind, because while we are on the gold standard, I understand it, but we're not on the gold standard, and I don't think we're in a position where we can go back to it anyways. So why is it that gold seems to be what everyone returns to? Because what is the use for gold? There's really no use for it other than a backing of a currency. And like, why is that? Is it just because people think that gold has value?
Gold's had value for 5,000 years. It's always had value. It can't be debased like currencies can. Now you mentioned well, why would anybody want gold? We don't have a gold standard anymore. It's precisely because we don't have a gold standard anymore that your paper currency has really no value. It's only the confidence that the people have in it because nothing backs it. So, gold, at least there's only a finite amount of it. Now, gold never goes up or down. It's the currency, the purchasing power of the currency that goes up or down, and it's reflected in everything, including an ounce of gold or an ounce of silver. I bought my gold, and I'm a significant gold investor. I believe, and I've had the conviction for some time that the end is coming and it's going to be a hyperinflationary event. And I didn't work my whole life to build up my wealth to have the government and the central bank destroy it to inflation. And the way you protect yourself is through real estate, through commodities, and through gold and silver. Now, I have more gold and silver as a percent of my portfolio than I'd ever recommend a client. All right. But I bought my gold at 800 in around 2005. Now to buy the same gold, it's about 2000. All right. So it's been doing exactly what it's supposed to do, preserve wealth. Right. And some people say, well, Lou, you can't eat an ounce of gold. No, but I could sell the ounce of gold for $10,000 and be able to afford the inflated food that you can't because your money was in a bank account. Right. The same is true of real estate. Look what we've seen happen to real estate prices in the last few years. That's inflation. It's the same thing. Every time that you dilute a currency by printing more and more of it, you're causing each unit of the currency to be worth less. Right. So every dollar that's printed into existence makes every dollar that's out there now worth less. You can't expand the money supply unless the economy is expanding at the same rate. So if you're expanding the money supply by 8%, your GDP better be 8% to sustain that actual growth of the money supply. The money's been ballooning. If I showed you a chart of the money supply, all right, the overall money supply in the country, it goes vertical like a hockey stick. And that's what's caused this inflation. And it's always the same recipe. You print money, prices go up because the value of each unit goes down. Now, there's an old saying in the gold market. In 1935, 1 ounce of gold would have bought a fine man's suit. And today, 1 ounce of gold will buy a fine man's suit. Nothing's changed. The suit didn't change, and the gold didn't change. What changed is the value of the US dollar that's used to purchase it. And we all know that everything is more expensive tomorrow than it is today, as it was 5 years ago, as it was 10 years ago, as 3 decades ago. Now, you see people on the internet, they show a picture of a Burger King or McDonald's menu from 1970. And it's like, 25 cents for a burger. and now it's like 325, right? That's inflation, and it's all reflected in the dilution of the currency, the monetization of debt, and that's going to enter into a currency collapse at some point. And when the currency collapses, everything goes up because people want more per unit until the point comes when if you have hyperinflation where nobody wants any currency. Now it becomes a barter country where, look, I'll give you this if you give me that. I'll give you this ounce of gold if you'll do this for me. That's the way it'll evolve into a new reset, to use a word that people like to use out there, comes about, and we have a new system. But when that comes, I mean, I don't want to live in that world. Now, I own a lot of gold and silver. I don't want my gold to be 10,000 an ounce. I don't, because I don't want to live in that world. That's a world of hyperinflation, currency collapse, food shortages, civil unrest, martial law, and God knows what else. But I call silver and gold financial life insurance. I coined that term a long, long time ago. Financial life insurance, right? I don't want to collect on my real life insurance because I'd have to die. I don't want to collect on my house insurance because the house have to burn down. I don't want to collect on my car insurance because I have to have an accident. And I don't want to collect on my financial life insurance. But if I die, I'm glad I have that insurance. If the economy collapses and inflation and the dollar dies, I'm glad I have financial life insurance. And that's the way you got to look at assets. Money burns up. If you have money in the bank, money in the money market, cash under your mattress or in your safe, in a significant inflationary environment, not even to mention hyperinflation, that money burns up. And if you have real assets, you preserved your wealth. You don't get richer, but you preserve your status of where you are today.
What about securities as far as a hedge against inflation? Because I think from what I've seen, that tends to outperform gold a little bit.
Yes. At times, stocks especially, bonds wouldn't. Bonds would be a disaster.
Yeah, that's
but
what I meant. Stocks, equities, yeah.
Yeah, equities. Because look, if it takes $100 to buy a share of IBM today, and the dollar loses 50% of its purchasing power, IBM would be $200 a share without earning $1 more, without growing the company at all, right? Just to keep the value of money the same. So did IBM go up to 200? Yeah, it did. But you're at the same value you were when it was 100 and the dollar had not dropped 50%. So yes, anything that's real, because a stock is a business. So if you own shares of a business, it's a hard asset in a way. In a tangential way it is, because those businesses like ExxonMobil owns oil in the ground, right? You take Apple Computer, they have the ability to manufacture goods and sell them. They have building, they have real estate, and so forth. So there is value to that that's inflating as well. Same is true of real estate. Anything that's denominated in the price in dollars would go up, right? Except dollars themselves would go down. So a smart investor, a person who's protecting themselves against a major inflation problem, has less cash and more tangible assets, because cash just burns up in an inflationary environment. So you don't want to have a lot of cash. You don't want to have a lot of money in the bank during inflation. During deflation, yes, because that's when stocks are going down. That's when investments are doing poorly. That's when real estate is crashing. You want to have a lot of cash so you can use that for opportunities to go in and buy those assets once they come down. But in an inflationary environment, money's trash. And when people start realizing that, when they start seeing that prices are going up in everything, whether it's real estate, gold, equities, food, they don't want to keep cash anymore. I have to spend it now where I can get more for those dollars than if I wait, right? Whatever that is. If gold's 2,000 now and it starts to go up and it's 2,500, you want to buy it before it's 3,500. So people get panicky. And here's an example. If you like coffee, say you walk into your local supermarket and you see coffee there and you're saying, geez, coffee's been going up. I think it's going to be more expensive 3 months from now. The way things are going, maybe it's going to be 30, 50% more. What are you going to do? You're going to buy all you can now, right? Because you want to get out of the money and buy the good before it goes up in value. And then what happens? The shelves become empty because there's just-in-time supply chains. We saw what happened to supply chains when COVID hit, right? What did happen if everybody starts running in and start buying things that they don't actually need right now, but they think it's going to be more expensive later, so I better buy it now and get out of my savings. so I have something tangible. People ask me, Lou, what's the best investment you can make right now? I say food. That's the best investment you can make because you may not be able to get it. And if you can get it, it's definitely going to be more expensive than it is today. And it's going to rise more than the bank is paying you for it. The best investment you can make right now is an ample food supply. All right. And in my opinion, precious metals. I think that's the place to be because it is universal money. It is not dollars. It never has to. That's the thing about an ounce of gold. It never has to be turned back into your own currency. You could take it and buy Swiss francs with it. You could buy euros with it. You could buy the new brick currency with it because it's universal money and it's not subject to any country's uh, uh, debasement of their currency, which is going on in a big way here and is only going to accelerate in the months and years ahead.
Now, I'm not held to some of the FINRA standards anymore, so I'd go ahead and throw in firearms and bullets in the investment category as far as what a good investment is.
Yes, I would agree 100% on that. And I do that investment myself. Because if you have tangible assets, you better be able to defend it. When the
Yeah.
hungry hordes are looking for food, you better be able to protect yourself
Well, that's why
from that.
that's why I've been under the, when it hits the fan, gold won't really matter anyway. If it gets to that point,
It don't
right?
matter. It don't matter if you survive. You'll at least have some wealth left to rebuild whatever life there is to have left. And I know this is gloom and doom stuff, and I hate to be negative, and I know, but I'm a realist. I've been doing this 40 years. I've been following markets. I've been following economies. I'm a historian of the past economic issues like hyperinflations in Rome and Germany and Argentina. I've studied this stuff. We are doing everything that they did but 10 times more. And how could the outcome be any different? It's not going to be different. The question is, when does it get critical? And I don't have that answer, but I think it's sooner rather than later, unfortunately. And I'm sad to say that. Look, I'm 63 years old. What happens, happens. I'll deal with it. But I have kids and grandkids, and they're going to live in this world. What kind of world is I don't know if you have children. Your children are going to live in if you live in America that's bankrupt. I mean, and we're going to be bankrupt. I mean, what are we going to be able? Are we going to be able to sustain $100 trillion in debt? Of course not. Something's going to break. All right. And unfortunately, we're stealing from future generations. We have for a long time, and they're going to really pay the price. And they're starting to pay it already in many families.
That's a good point as far as how much debt is sustainable. Do you think that one of the issues that we have is the way that our government looks at debt when they're looking at debt, when they look at inflation? I personally believe that there's a level of inflation and it's probably around where it's at now or was in 2022, where it's hard to live with, but it's not to the point where people are revolting over it. Because inflation does a couple things. It increases tax revenues, it's a hidden tax, and it can, if it's not bad enough, help increase GDP. And what they look at is not the total debt, but the debt to GDP ratio. And if they can somehow reduce that ratio in the time span of, let's say, Biden's administration or the first year or two, well, they can tout that instead of saying we're going into significant debt. We reduced our deficit. Well, why did you reduce the deficit? It's not because you're not spending less money. It's because you've brought in so much more money because of the taxes and inflation. Who is it? Milton Friedman, I think, said a government running a surplus is only because the money comes in so fast that even the government can't spend it.
Inflation is a tax on the citizens. That's what it is. Instead of just raising everybody's tax rates, what they do is they make you spend more for everything by printing money that they don't have to fund the deficits. So they're taking it from us. They're not taking it in income taxes, but they're taking it from us in the cost of living. So it's a tax. It always has been a tax.
And they're the only ones
And
that really benefit from it because they're getting more in tax revenue. It doesn't hurt them. They're not selling goods and services.
few people benefit from inflation, and unless you're a big investor in tangible assets and stuff like that. But the average American middle class family, what's left of the middle class in this country, which is being systemically destroyed, um, uh, inflation is a tax that they didn't see coming. I mean, Americans for, since 40 years, we really haven't had a big inflation problem. We had creeping inflation, but we didn't have inflation that was 10% or anything like that. So it's kind of new for a lot of people. A lot of people weren't even born. They have families now, young families, and they're dealing with inflation, and it's really destroying them.
Let's go into, while we're on this topic, modern monetary theory. Now, I don't know how much you know about modern monetary theory. Basically, the idea is that the government can print as much money as it wants, and instead of taxing people to get revenues to control government spending or taking on debt to increase government spending, they're going to tax people to only reduce the money supply and mitigate inflation. Therefore, they're not taking your money because they need to spend it on projects of the government. They're taking your money because they simply put too much money into circulation. Do you think that
I'm
we're heading
totally
down that route?
Yes, but modern monetary theory is total bunk to me. I'm from the Austrian school of economics. Okay, I'm not into the monetary theory where you just print money and you print prosperity. You don't do that. It's this. All you have to do is go back in history and study this stuff. It always ends the same way, and nobody wants to go back and see it. Whether it's Rome, whether it's Germany, whether it's Hungary, whether it's Zimbabwe, Argentina, it doesn't work. And that's what's so insane about it is that there's so many examples of it wasn't called modern monetary theory, but it was the same policy. You print money, you create money, you go into deficit spending, and you think it's not going to end in disaster. It's going to end in inflation and currency collapse. If it's happened 100% of the time in the past, what makes anybody think that it's going to be a different outcome this time? It's going to be the same outcome. The question just is when. Maybe you can kick the can down the street a little bit with deficit spending and borrowing money and going into debt. Yeah, but this sooner or later hits that tipping point that all of a sudden the critical mass is hit where you can't borrow anymore. Either people will not lend you anymore because no investors want bonds, and interest rates skyrocket and destroy the economy, or the central bank makes up the difference and buys it all. And when they buy it all, that's modern monetary theory on steroids. That's what causes the hyperinflation collapse and the collapse of the dollar. And we have idiots running our country. You think the people running our country are smart people? I don't care if you're talking about the Federal Reserve. They've been wrong all the time. Every time. Oh, inflation is, what do they call it? Transitory, right? It wasn't transitory. They're raising rates now in the face of an economic contraction. They're destroying Americans. You can't sell our house or buy our house right now, right? We've had a frozen real estate market. Government borrowings are going up because our interest is skyrocketing. Do you realize the Federal Reserve raising interest rates? Who it hurts the most? It hurts the U.S. government because of all the debt that we have. It's counterintuitive. It's insane. We're destroying our own country through high interest rates. And that's the thing now. It used to be when Paul Volcker was Federal Reserve back in 1980, when we had the last inflation, similar to this, it was double digits. It was, if this was reported accurately, it'd be the same. Paul Volcker raised interest rates to 17%, right? 30-year Treasury bonds were paying 18%. Boy, I wish I would have bought some of them back then. You would have made a fortune. But he could do it because we didn't have a huge debt. We didn't have a huge deficit back in 1980. The increased interest rates were not that much of a burden to the government. But now, given the debt that we're in as a country with $33.5 trillion in debt, it's insane. We throw these numbers around, and they don't mean anything after a while. But, a billion is 1,000 million, and a trillion is 1,000 billion. And we have 33.5 thousand. I've lost billions. It's just the
Yeah.
numbers get astronomical. You can't even. And now we're not even talking about the unfunded liabilities of Social Security and Medicare, like we opened the show with, right? Where's that money going to come from? I mean, it's hundreds of trillions of dollars. Look, it ain't going to work. All right. I don't care how many politicians come. I don't care if the Republican or Democrat. We've passed the point of no return. There's nobody who's going to improve the economy. The return of Donald Trump, or maybe the return of Jesus Christ is necessary, but the return of Donald Trump is not going to do it. We're past the point of no return. There's nothing to cut, right? You can't not pay the interest. We have Social Security, Medicare, Medicaid. That has to be paid. That's non-discretionary. You got defense spending as we're entering possibly a nuclear world war. That spending isn't going down. Where do you cut to get back into a budget? And now you have interest rates rising. So now the interest expense on our debt is going to surpass the defense budget. It's not a good scenario. And like I said, you don't have to be a Harvard PhD in economics to understand this stuff. The politicians are the worst. because politicians don't care. They have enough money. They'll be fine. They have an exit strategy. And it's easier for them to go further into debt to fund their political whims than with other people's money. They're not using theirs. You just talk, Biden just sent a $105 billion bill to request to Congress to fund Israel and Ukraine. We don't have the money. If somebody in my family came to me and I had 100,000 in credit card debt, all my credit cards are maxed out. I have 2 mortgages on my house, and a cousin comes to me and says, "Hey, Luke, could you give me $5,000?" I'm going to say, "No, I'm broke. I can't do it." Why aren't we doing the same? You don't think 105 billion could be used in this country for something good? How about homeless veterans? Get them off the street. How about infrastructure stuff here? How about a border wall? Electrified one at that, if you ask me. This is insane. And where does it end? Again, it's not real money to them. They don't care. You think Joe Biden cares if he sends $105 billion to Ukraine? It could affect his life. You think Mitch McConnell cares? Nope. So, these politicians, and who knows how much of this money is being kicked back to Washington in various Swiss bank accounts. I mean, Ukraine, it's the biggest corrupt place. How much money does Zelensky have in a Swiss bank account somewhere? And how much is going to the big guy of all this money sloshing around without any accountability? You send 100-something billion dollars to a country that's known to be corrupt in the middle of the war with no accountability. Do you think there's not going to be some corruption, some stealing of that money, some kickbacks to the people who are making it happen? The country's so corrupt. They say Ukraine's the most corrupt country in the world. I think the United States is, to be quite honest with you.
But I want to go into another topic here, and that's the capitalism debate, because now what we're seeing is this huge growth in popularity, especially among the left and people my age and younger, for more of a socialist style of government, and even a lot of times a communist style of government. Do you think we're experiencing somewhat of a Marxist revolution in the United States? And do you think that could be successful?
It's in full swing right now. It's been going on for some time. Our universities and our educational system has been infiltrated by Marxists, and it's gone on for a long time. But now it's radicalized. It's beyond. I mean, people go to school now not to learn how to be a doctor, or a dentist, or an engineer. They go there to be indoctrinated. They go there for gender studies and race relation stuff, and they get all this debt they build up, and then they can't pay it when they get out because they can't find a job. But they're radicalized. Look what's going on now in college campuses regarding the Israel-Palestine thing. I mean, do you believe how many Americans siding with the terrorists?
Yeah, I
I
can't
mean,
believe
this
that.
is the product of our education system. And they're all taught to be socialist and Marxist. And that's why you can't get people to work anymore. Everybody wants a handout, right? Everybody I know, all my clients who have businesses, can't find somebody to work, even with good pay. They believe that they're entitled to be taken care of from birth to grave, and they're pushing more and more, and they're being successful, electing politicians that agree with them. Being, I would never send my kid to a college these days. I mean, it'd have to be, a special college that I know isn't radicalized. But we're not training our people to be productive. And if they're not going to be productive, they want universal basic income. And the more and more radicalized they get and the numbers grow, the more and more politicians are sympathetic to them. And that's how it works. But we have a Marxist takeover. Maybe it's done. Maybe it's taken over. We just don't realize it yet. The next final step is coming. We have a takeover of our educational system, our media, totally Marxist and totally left wing and total propaganda. There's no truth in the media anymore. Entertainment, sports. I'm probably missing a few of them, but each of these industries, major parts of American culture, have been taken over by radical left wing. Now, they're not the majority in America, but it doesn't take the majority for a revolution. I think in Russia, when Lenin did his revolution, he only had 12% of the population agree with him. But
Yep.
all it takes is a violent minority. And these people are violent. You see what happens in these demonstrations and stuff? the violence against just innocent people trying to drive through a street, and it's crazy what's going on out there in the cities. I wouldn't go into New York City unless I absolutely had to. I wouldn't go to Philadelphia. I live in New Jersey, so me and my wife used to go all the time. We don't trust going there. Who knows when some kind of uh, revolutionary kind of demonstration pops up out of anyway, or just general crime on the streets, which are out of control due to left wing socialist policies in these blue cities. Um, it's happening now. We need Americans to wake up to it and really see what's happening. I think a lot of people are. I really do. I think people are starting to wake up and understand because it's being shoved in our face right now. Whether it's teaching your kid who he goes to third grade that he's a girl. If my son came back from third grade and told me, "Hey, Dad, I was at school and they're saying that maybe I'm a girl. Maybe I should wear a dress to school tomorrow," I would beat the crap out of my kid. I go to jail now for that because I'm misgendering him. I'm not affirming his desire. But you see what's going on in these schools. I have clients who are teachers in elementary, secondary, and college professors. And they tell me, first of all, they're closet conservatives because they can't let nobody know, what their thoughts are. They just shut their mouth or just nod their heads. All right. But they tell me, Lou, you won't believe what goes on in these schools now. And I think a lot of American parents got a wake up call by watching the Zoom classes their kids were taking during COVID when they were looking over their shoulder and seeing what these radical teachers were trying to teach these kids. So yeah, we're heading down towards that thing. And now, unless we push back quickly, revolutions are very successful until if the people don't speak up and push back. And what is a radical revolution? I'm not talking about, like Soviet Union communism, although it may come to that, but just, hard leftist European socialism, which isn't good for anybody in the end of the day.
It'll come. It won't be a violent one, I don't think, because by the time I think that it's going to be successful. By the time that transition occurs, it's going to be because of our children who are in the school system that have been taught this way of thinking and a long term education plan. Where I think it all starts, I think it starts with the unions. I get a lot of heat for my opinion on unions. Now, I think that unions are fine. I think that you should be able to have the right to organize, but I also think the business should have the right to fire you if you organize. And it should come down to basically your use to the business and what you have to offer them and vice versa. And that negotiation can happen, but when we have these permanent unions, these unions now have to have a demand to continue to exist. And to have a demand for the union, the worker has to be getting screwed. Therefore, they're only going to negotiate contracts where in a couple years, they come back saying the worker's getting screwed again, and we have to go and collective bargain and go on strike. And it's a recurring theme here. But when it comes to the spending and the money, there's a reason why the Democratic Party is such in favor of the unions. I have the NEA here. They had 60 something million in political lobbying expenditures. 96% of it went to the Democratic Party, but they also spent over $100 million in grants in 2020, that same year, going to these different organizations, these nonprofits, which, by the way, when you go and look up their balance sheets, they weren't so nonprofit. They were very profitable, especially over a period of a few years. And I can go into all the details. However, a lot of these organizations, I'd say the majority of them, were run by open Marxists. And when you look at it, it's very concerning. And I don't see how you can actually combat that.
No, no, you need to. There needs to be an alternative to the public school system, and whether it's charter schools, home schooling, religious schools like Catholic schools and things like that. I would never send my child to a public school nowadays. Zero. I don't care if I had to work 3 jobs to put him in private school or I'd have to homeschool him, whatever. I would do anything I could to keep them out of that system because it's not in their best interest. And they're going to come home one day and tell me things that I totally disagree with. Oh, but the teacher said it. And, these people, like you said, it's hard to get rid of them because they're tenured, they're in the union. And in my state, New Jersey. All right. We have big deficits here and everything. The New Jersey Education Association is powerful. And I do taxes for them. The retired teachers and the ones that are working now. The ones that are working there and been there for 10, 15 years are making 90 to 100,000 a year in salary. And they have the summer off and how many other holidays. And then the ones that are retired, are making as much in pension, uh, and and they're retiring at 55. So they're going to be getting that pension, full medical benefits for 30 years, 40 years
In
down the
health
line.
insurance, because I'm sure there's some kind of deal there
Yeah,
that bridges that gap
yeah.
between 55 and
Full health
65.
insurance. Full health insurance. You don't pay a dime when you're in the union. And my problem is, and I said it on my radio show here in Jersey, and it's caused me some problems with some union people. But I said that why is it that because you're a teacher that you get a free pension and a free retirement, a very generous one, but me as a financial planner or another person who's a doctor has to pay you through our taxes for you to live a comfortable retirement, and we have to fend for ourselves and save for ourselves. How is that fair? I would tell my kids, hey, work for the government. That's your best retirement plan possible. Is work for the government. You have steady increases in your salary. You'll have full benefits your whole life, and then when you retire, you'll be carried to the grave. Uh, Versus being an entrepreneur or a carpenter or a doctor or anything else. And it's a shame that we're pushing people to go that route. But it's everything is corrupt, Mike. That's what I'm trying to tell you is the whole system has been corrupted. The values of America have gone. The values that our parents and grandparents had to do the right thing, hard days work, save money for the future, don't get into debt. Um, there was no talk of this gender craziness. Racial things have been approved until the George Floyd thing, which things are coming out now about that maybe it wasn't the murder of George Floyd. But the bottom line is that we've passed the point of no return as a culture, as an economy, as a government, as a society. I don't. It would take Superman to come and turn it around. The question is, can we slow it so it doesn't go? This logarithmic numbers. They say that it's it's slowly, and then all of a sudden that it happens. Well, we've been at that slow creep for probably 40 years right now. As far as the liberal leftists take over the country, it's close to all at once. And if that's the case, I shudder to think what this country is going to look like in a few years from now.
So you give me a lot of time and I appreciate it. I got three more things to be quick that I want to hit on. The first one, ESG. I want to get your thoughts on that. Second one, I want to tell you a theory and just get your opinion on my crazy theory. And then to finish it off, I want you to just tell people what they can do to hedge what's going on in their financial life and so on. But to start with the ESG score, since we're on the topic of Marxism, I think it kind of plays into that same row. How crazy is this and how is it affecting business?
Well, ask Budweiser Light how businesses since their woke things that they've been doing, and I think, to be quite honest with you, Mike, that we're at the peak of wokeism. I think that America's had enough of this, and I think corporate America too now is starting to have enough of this because it's hitting the bottom line. I'm a shareholder of many companies. If I was a shareholder of Disney or Anheuser-Busch, uh, I would lead a class action lawsuit against these companies and the board of directors and the officers of the company. I don't invest in your company so you could do social good or deal with racism. I invest in your company to make money. And I expect the board of directors and the company to do everything possible to maximize shareholder profit and revenue. Everything that these companies have done are causing the opposite. And the threat of lawsuits, which there's plenty of them out there now, but not enough, and the loss of revenue and the potential loss of jobs for these people, um, uh, is starting to make corporations rethink this ESG thing. And all ESG is environmental, social governance. It's a social credit score for corporations. And it started with Al Sharpton and the Reverend what's his name
Jackson?
Jackson, um, uh, shaking down companies for racism issues, and these companies would pay them. Right, that's where it started, like 30 years ago. And now we're at the stage now where, like Vanguard want to invest in a company without a good ESG score, or BlackRock or something like that. Well, that's silly. It used to be back in the day. There would be mutual funds that would only invest in what they called social. Uh, I forgot the term that they used to use for it. It was companies that didn't make cigarettes or anything that was bad for the environment or something like that. And I thought that was the most ridiculous thing in the world. As an investment advisor, my job is to make money for my clients, not to make some social change. They can do that on their own if they want to, right? My job is to make you money. And if I invest in your company, your job is to make me money first and foremost, not to do things that will lower revenue or lower profits so you could be some environmental and social giant out there saving the world. But again, I think it's changing. I think people are sick of it. I know parents have done with this gender stuff. Their kids coming home, but my pronouns are they and them. I'll give you your pronouns. My son came home telling me that. So parents now are finally getting involved. They're joining school boards. Meanwhile, the government brands them as terrorists, domestic terrorists. Uh, that's the thing that scares me more than anything is the weaponization of our justice system and FBI and police. I mean, that is the turning point, in countries when all of a sudden you're a political, not a political prisoner, but a political adversary that needs to be demonized and gone after. I mean, look what they're doing to Trump. It's
Absolutely.
insane. It's insane. It's something that you would see in Peru or the Soviet Union or China. What they're doing to this guy, a past president of the United States, and what they're doing to him, they're doing to more than half the country right now because they're involved with him. I'm a MAGA Republican. I love Donald Trump. Am I going to get a knock on my door by the FBI or get audited by one of the 87,000 new IRS agents? I've already had to deal with the SEC on some issues because of things that I've said on this program,
Which is
and I don't
just
want to get into it.
crazy. Yeah, no,
All
that's
right.
fine.
But the
That's
fact is, if the government goes against you, you are screwed. You can't win. They'll bankrupt you with legal costs because they have a bottomless pit of money, right? They'll destroy your reputation. And that's the fear that a lot of people have. And that's why a lot of people will acquiesce to government control and political control by a revolutionary party. Because you don't want to lose your job. You don't want to have the government coming after you, whether it's taxes or whether it's legally, right? And what do? You acquiesce and say, look, I better just shut up, right? And be a good little commie and do what I'm told because you will be attacked. And that's my biggest fear. Some of the things that I've seen happen now with the J6 people, I mean, being in solitary confinement for months without a trial. I mean, there's a guy there who's been in jail for 1,000 days without a trial. How is that legal in America? In the worst conditions possible, right? But meanwhile, I can go to New York City and I can gun down somebody on the street and I'll be left out. I'll be let out this afternoon. All right. So that's politics right there. That's a two-tier justice system. And when you have a two-tier justice system, democracy is soon gone. And that scares the crap out of me. And that's what keeps me up at night. Now, one good thing that Americans have that other countries don't, many of us are armed. And it's not going to be as easy as it would be in an unarmed country. And the first thing these countries tend to do is try to disarm you before they do the big revolution. And they're trying as best they can, and they have been for a long time. They haven't been successful. Thank God for the Supreme Court. But that could change too. But scary times economically, scary times socially, culturally, and from a government point of view, scary. Not to mention the geopolitical issues we're dealing with now. We live in very, very dangerous times. And how do you protect yourself? Well, the first thing you do is make sure you have enough resources. Food, water, very, very important that you don't have to leave your house for 3 years. I don't have to leave my house for at least 6 months if the shit hit the fan. You should make sure that you're the same way. Do you want to be out there trying to fight somebody over a loaf of bread or a bag of rice? I don't. You got to be able to protect yourself financially because inflation's coming. It's here. It's going to get worse. You may have an ebb and flow of it. We may even have deflation first before the hyperinflation kicks in because I think as the economy implodes, you're going to see housing prices come down initially. You're going to see the stock market crash. You're going to see a lot of assets drop in value, but only then to bottom out and really take off when the money printing just gets crazy. And so you want to have some gold and silver in your life. You want to have some maybe commodity based investments. You may want to have some money in the equity markets after it crashes, not before. Uh, and you want to make sure you can protect yourself. Now, I was listening to Dan Bongino the other day, and he scared the crap out of me. He's saying, he was adamant. He said, what I know, he goes, if you're not armed, you better go out because nobody's going to help you. It's up to you to protect you and your family, and go out now, get a gun, learn how to use it. He goes, because you're going to need it. And, for him to say that, it scared the hell out of me. Uh, I don't even say that yet. But if Dan Bongino's, he was Secret Service. He's got a lot of good contacts in the government. He knows what's going on. And that's what scared the hell out of me when he said that. So, you can only do so much. Let's face it. We can't protect ourselves 100%. But you can buy food, you can buy gold and silver while you still can get it, and while it's still at a reasonable price, and you can make sure you arm yourself so you can defend your family. Not go out and save the country and go into civil war, not to be an insurrectionist. That's not what I'm saying. Having the ability to protect what you have, your loved ones, and yourself.
Preparation. Now, I have a crazy theory. I just want to get your thoughts on it. We were talking about Social Security earlier and the burden of Social Security, the immense cost that it has to our country. When we go back to COVID, I personally think, just from my time working in finance, there were certain regulations put into play starting in 2016 with the Secure Act that kind of got me thinking here, because a lot of Americans have qualified assets, 401k money, IRA money that hasn't been taxed yet. And when we look at COVID and what that targeted, it targeted a lot of the elderly. It targeted a lot of the people who are unhealthy. And I personally believe that a lot of the reasoning behind COVID was to try and offload a lot of the costs when it came to Social Security, but also because in the Secure Act, if you remember, they passed a law stating that when you inherit that qualified money from your parents, you have to take that money out over a 10-year period. And if you look at the ages that people are inheriting this money following the death of their parent, they're at the highest earning years of their life. Therefore, that money that they're taking out in that 10 years is being taxed significantly higher than it would have been previously. I think that because of all the money and qualified assets that the government couldn't touch yet, it was a way to get a lot of the tax revenue from this untouched qualified money and also reduce some of the burden on Social Security with the unhealthy people that are receiving SSI or the elderly people who are receiving Social Security benefits as well. Just wanted to get your thoughts on that.
I think you're spot on, especially with the IRA situation. On this program, on my program, I was livid about it when they did that. As an accountant, as an investor, as a financial planner, it's a money grab. That's all it is. It's a money grab. Like you said, if my parents die, at 75, I got to take it out in 10 years. I'm in my 50s. Like you said, I'm in my high earning years. Now, if I don't take it out gradually, you don't have to take it out 10% each year. You can take it all out the last year. But then you're going to have what, a $500,000 income that has all kinds of other effects in your life, like how much you pay for Medicare and all that other stuff. I'm doing a lot of tax planning now as an accountant with my clients who've inherited money from their parents. Now, my firm is 36 years old. All right, so I have a lot of clients that have been with me decades. So a good portion of my client base has been dying off the last few years. So we deal with this all the time. And this is the worst thing to ever happen to somebody who inherits retirement assets. And we have to do incredible amount of planning to figure out what's the best way to do this. If you're going to work the next 5 years, don't take any of it. Once you retire, let's take 20% a year over the 5 years you're not working. But taking that money affects your taxation on Social Security, affects benefits that you may get in your state. It's just an outrageous thing. Now, as far as the COVID, to kill off the seniors, I have a very good friend of mine that believes that's exactly why that COVID was released to cull the senior population and to take the burden off of Social Security. And you know what, Kevin, Mike, I nothing would surprise me. Nothing would surprise me in this world. The diabolical nature of what's going on. And one thing we didn't talk about is I believe we're really in a battle of good versus evil right now. I mean, I believe it's more than politics. I believe it's biblical what's going on right now. I believe that evil has been unleashed upon the world. and we're battling that battle. And right now, evil is winning. Now, I believe in God. I'm a faithful person. I believe God will win at the end. But right now, you have a battle going on because you see the things you see in culture. We could talk about abortion. We could just talk about the gender stuff. All these things are anti-God. They're all evil. Uh, it's just things that are happening around the world. I mean, just what these Hamas people did to these Israeli children, and I mean, how could it be that much evil in the world? I mean, I don't care what your political issues are. You don't behead a baby. You don't cut off the baby's fingers and burn babies alive. I mean, that's pure evil. I mean, that's beyond politics and that's beyond terrorism. That is demonic evil that we have in the world. And that's what we're fighting. So we're fighting everything right now. We live in times that are very challenging, very dangerous, very evil. I hate to be so negative, but that's what we're living in. And you could do your best to protect yourself and be faithful, pray, and be prepared for what may happen.